Samir Arora is joining us this morning. He's our market master of the day, founder and fund manager at Helios Capital. Samir, it's a pleasure, as always, great to speak with you here on the channel. I want to start with this, what I described as a feverish move in mid and small caps, Samir. I mean, if some of these, at least a few of these stocks are not in one's portfolio, it can give one a serious case of FOMO. Just looking at the way these stocks are running up day after day after day, I just want your thoughts on how you're looking at it right now.
So therefore, the way to do it is to have all kinds of stocks in a portfolio, which is what I've been saying for 20 odd years, that you cannot be narrowly focused. So for example, many of these from Paytm to Zomato to kinds we also have. And on the other hand, we don't have the Tata Motor types. And this is what happens if you buy a slightly broad basket, that when good times come, it won't be only on one end of the market. There'll be a number of stocks going up, therefore be a little bit diversified. Otherwise, if you buy only 10, 15 stocks, by chance, maybe those stocks are not in the list for that year for the market, and that really hurts investors and longer term returns.
Okay, so let me congratulate you for owning some of these stocks, Paytm, Zomato, right? I mean, they've had their share of challenges and now they've had a good run as well. But for someone who's perhaps missed the bus here in the last couple of months, is there more to go?
I think in both there is more to go because they are now turning around. But, I've been saying this for 5-6 months now on your channel on these two stocks. So if they didn't buy it, then they are unlikely to buy it now, the guys who were overly analyzing and debating things. But on the other hand, I did not buy the auto companies and they've also done well. That's what I mean, that it's very difficult to say ahead of time that what exactly will do well in the market, except that broadly speaking, some 1/3 of the market will do significantly better than the market. That is just inviolable rule.
Hi, Samir. Good morning. Samir, what do you do with the IT pack? There's a fear of a global recession or a slowdown in the United States as well. And sentiment seems to be getting hit out here. Numbers are far from inspiring. Worst is yet to come?
I think it is not that worst is yet to come, but the stocks haven't fallen as much as I would have thought they will fall. So we have near zero. Near zero means because we call Paytm actually sometimes tech, sometimes financial. But in pure IT services, we have zero. And all I can say now, because I've had zero since July last year, is that it is unlikely to pain me even if it doesn't fall. But I would think that there are more challenges ahead, particularly because I don't believe in a big picture concept that if a company has been doing well for say 8-10 quarters, that it is very easily to they disappoint. They would bang their head and try not to disappoint you if they only thought it was a 1 quarter problem. The fact is that a big company cannot say 1 month ago that it is bad and then after having done well for many quarters and therefore knowing the impact that a bad guidance or a disappointment would incur, and then say from next quarter things are okay. So I can imagine in a big picture sense that this quarter again we'll have bad things to say from the IT guys, and then over time we'll see. But on the other hand, I think it is unlikely that they will outperform the rest of the market so much that I would feel the pain. Maybe they don't fall, maybe they'll go up in line, but I am now thinking that they are not likely to outperform at least, and that is good enough for me to buy these other things that I have.
Samir, are you surprised with the rally we've seen in auto stocks? What's your sense?
From our side, we are surprised because we don't own. It's just that we made up for that with other things. But my thing was more on a big picture sense that if I was seeing after COVID, wherever there was pent-up demand, mostly that pent-up demand got normalized. You see in anything. You can see it in cloud penetration and online penetration, in home improvement, in Netflix subscription. So I assume that the auto, this thing is also a pent-up issue. But in general, the auto sector has done well, maybe because it didn't do well for long. But if you just look at, say, not all of them, but if you look at some of the two-wheelers and you see their dispatches as the company has done, and then what you can see on the Vahan, this thing, there's a massive difference if you see for the last 2 months. So we don't know exactly. It is because exports are not doing well for last 2 months. You dump them in India and all that. And on this Tata Motor type company, so I will never buy because it's beyond my simple brain's understanding how to analyze such a global company.
Okay, well, there are other spaces which are picking up, right, Samir? The focus now is on renewable energy. I mean, we just heard about Tata Power putting up, almost 1,000 megawatt renewable energy project. And a lot is happening in this space. From an investor standpoint, how do you approach it?
You don't approach it. That's just a simple way. All these things you do when they are ready. Like we didn't buy Paytm when they were building whatever. But after they had built, after the IPO, it had fallen 75%. Then you said, okay, now what progress they have made. All these things of buying things on investment, which will take years to pay off, and God knows what will be the terms at that time of the power that they produce. There is absolutely, we are not rewarding people for making big investments, whether in technology or in the market. Only when you can see the outcome or output of that, then we'll see. There's absolutely no need to go anywhere near.
All right. Samir, a couple of stocks that you had bought, and you had disclosed it as well, was Ambuja Cements at the height of all that entire Adani fiasco that played out. And you said that that's looking good. And HDFC Life as well, post the shocker that came out from the budget. What's your view on both these two stocks?
No, HDFC Life, we never said that we have bought.
You owned it? You never
owned it before. We owned it for 2 years and we sold it in the disappointment, but we have not bought it. Yeah.
So HDFC Life out of the way. What about Ambuja Cements? That's played out very well.
We bought Ambuja Cement and we also bought Adani Ports in Feb. Okay. And right now we are keeping both. And actually we bought more Adani Port after the Supreme Court, this thing like another 1%. So far so good.
So far so good. What about sectors like power, etc., Samir? Okay.
Not our cup of tea.
Not your cup of tea. Okay, got that. What else is keeping you excited? Keeping you focused? Where else? In pockets that you may have identified.
This year, because of not having IT and because of having some of these, we are doing well in life. So when you are doing well, you just can relax a little bit, read books, but big picture basis, forget about the small picture, is that this is 2-3 years of India being rediscovered or reloved by people trying to desperately flee China. It's a one-line story. Let's not make it more complicated. That if the world doesn't have to replace on the margin, let's say only that, we don't need bigger stories than that, is that with new flows being hesitant to go to China, so in the Asian flows, emerging market flows, Asia, Japan, whatever you categorize, and it may be even global, but if they get a little bit upset with not that they are getting it, everybody can see it. You can see it in these Canadian guys shutting down, according to FT, their Shanghai office or something, and then in Economist it's saying that the PE guys don't want to invest in China. Then that kind of money, slightly more money into India, even if it is 20% more, will be huge.
Even the Sequoia split which has happened, the FT was saying that is, there was a quote which was, you can't wine and dine with the US administration.
Yeah, US president and then go and invest in China. Basically, it's because the US guys now don't want, and it is at two levels. One level is that, okay, the companies or that, as a stock market, it was disappointing. But second is now geopolitics, where it is seen as a strategic competition and a threat or a equal competitor or whatever. But whatever, I'm saying this is the story. So be bullish on that. After that, you can buy what you want. We buy 35 stocks, so broadly we cover our bases. And even if you go horribly wrong on some stocks, like say the auto, it doesn't matter, because as I've been saying, it's never the case that only 10 stocks go up. Always enough stocks go up so that if you can get some of the others, you can have a good life and read books in office.
Okay, you said read books. I think that's your weekend plan, right, Samir, to read a lot of books? You've said it twice already.
No, but I always have. Like today, now I'm starting The Price of Time. which was recommended by Druckenmiller. Please go and read it. I haven't started it, but I have it with me now.
So once you're done reading it, then tell us if we should read it or not, right?
Okay. But it's been recommended by that fellow. Hopefully it'll be good.
Your recommendations are the best always, right, over the years. But
with the number of books that Samir has, he's taken what Singapore is. They build vertically, right?
Yeah.
So the tower of books, it goes vertically. Right?
he's replicated that.
Space is at a premium. Sorry, go on.
People ask how book reading leads to money making. So this book, this Chip War, I read in November, December, which I think I sent also to many of you guys.
Yeah. Did you?
Because of that book, I bought at that time Nvidia and TSMC.
Oh, wow.
But I did not buy the third one, which it comes out from that book, ASML, which also would have been great, but I didn't know so much to buy. But I just bought these two big picture. So
but did you buy lots? Did you buy lots of it? And I mean, you just needed one stock this year.
No, TSMC is not up that much. TSMC is up.
No, Nvidia.
He's talking about Nvidia. Yeah.
Enough.
Why are you feeling bad about missing out on Tata Motors when you bought Nvidia? I mean, you can't be so greedy, right?
Tata, there's a difference. But I have made up for Tata Motors. That is all I can say by having these other 2, 3, 4 stocks which are up in the same 50% type range.
You know, I have one question to ask you, because one thing that's really worked well for India in 2022 at least, and of course part of 2023, is this corporate profit to GDP ratio, which everyone's talking about, which has gone to, I think, a decadal high of 4.5%. Do you think there's more scope for an up move there? And which are the pockets that could lead, to further earnings growth? Because at the end of the day, the market fundamentals are sort of the rally is generally based on earnings recovery, right? Corporate earnings.
No, but actually, the thing is, because I don't see the markets in such a macro way in that sense. I mean, we see a little bit of macro if we can. But broadly speaking, right now, other than this big picture thematic thing of China being favored, the thing is, even our own valuations are broadly only in line with our longer term average. So they don't look out of line. But from our actual portfolio building, we are always, I've been telling you, we only buy financials and consumer because we see numbers, but we also want some conceptual thing behind it or a thematic thing behind it to say that, yeah, this thing can go on for a number of years. How to say that otherwise? And for that, you need a little bit of the backdrop kind of logic that this thing can go on for 3, 4, 5 years. But otherwise, if you see pure numbers, you may not, unless you have a background of a concept or a theme or whatever you want to call it, you will not be able to say that this is longer term. So if I say that, okay, right now the corporate earnings are, say, lower than average, let's say, as a percent of GDP, and they will become higher. Now, that for a macro guy might be, okay, I'm playing a reversion to mean, so I'll buy the index. But we are already in the market. We are only trying now which stock to buy. And for that, thing is that that macro thing won't influence us in that sense. That is
all right. Yeah.
Or for a guy to buy into India. That we've already done.
All right. Samir, Paytm and Zomato is something that for the last few months you've been quite positive on, and you've written that pretty well. But you were studying PB FinTech as well, I think. So you have giving it a look. Did you ultimately buy or you missed out?
We didn't buy. That is also up as much, but we don't have it. We didn't buy it.
Samir has not missed out anything. He's bought Nvidia.
We did not buy it.
Who cares?
We would have, but we didn't buy it. We didn't buy it.
So give us something new. What do you think? What is your thinking? What will do?
That's what I'm fishing for.
What will do well, Samir, from here on?
The new ones, if I say now, it's not right. When we have it, we just tell you once in a while, because now when you're in India, the portfolios anyway get disclosed. By the way,
Samir, we're looking for a fresh name, Samir.
You know everything that we buy.
Samir, we're looking for one fresh name.
Fresh name. I don't know what to say, because my Indian guys will say, oh, you're not supposed to talk so much about stocks. By the way, if we have a mutual fund one day, then you will get 100% disclosure of your domestic ideas at least.
You can tell us about global stocks, right? You don't have to mention Indian stocks.
Global, by the way, I have not really bought this year anything new other than, actually for the first time in my life, I bought Tesla.
Oh, okay.
But by the way, sorry, go on.
Yeah. No, I was just saying why, but anyway, you ask your question. Yeah.
This just to take that point a little forward briefly, Samir, Global, I mean, allocation to global stocks. I mean, you've always believed in that, especially in the US, and you look at other markets, etc. as well. But for local investors here, I mean, it's how do you, because the mutual fund, that limit is still full, right? You can't really.
So mutual funds can't buy. So I guess, of course, the big guys can buy, do LRS, but the LRS is very painful in terms of what I understand in terms of income tax, not liking you do LRS and asking too many questions. So the best would be to buy the ETF kind of thing, I would think. But everybody should have 20% or something like that in
a
non-index.
global,
If you can, why not? I mean, that's diversification. Plus, many companies outside are very, very good.
Okay, Samir, we actually have run out of time, but it was a very enjoyable chat. Thanks a lot for joining in.
Thank you.
And it set the mood for Friday and for our weekend. We're all going to go and grab that book and make sure we get a productive weekend going. Thanks, Samir, for joining in.